I think Bitcoin is still a credit story, and we'll see what happens with the Federal Reserve meeting today. But I think this recent drop in Bitcoin was more a wake up call that there's a tightness in credit in the US money markets. If you take a look at SOFR, secured overnight financing rate, which is essentially a tri-party repo general collateral issue, you can get the details if you want. That rate should not be trading above Fed funds. The 75th and 95th percentile of awards on those rates on certain days have traded above Fed funds. The standard repo facility, which is basically the Fed's ability to inject cash into the money markets to make sure they function properly, has been activated in meaningful sizes and over the past weeks. So money is too tight. The ample liquidity has vanished from banking reserves. That's why the Fed's going to stop QT. It's a quantitative tightening or balance sheet runoff at sometime soon. And I think Bitcoin is sort of just reacting to that, saying, okay, there's tightness of dollars. That's why it drops 10, 20% off of that, either the Trump-China tariff thing, right? That's at least how I read the situation. I think that Bitcoin and gold will trade on the same sort of dollar debasement inflation story at some point. But right now, sovereign countries are not buying Bitcoin. They're going to buy gold. They know what gold is. They know that gold has been used to trade between countries since we've been in for thousands of years. They're not going to lose their jobs buying gold to buy the medicine and the oil and the goods that they need from other trading partners. They could lose their job if they bought Bitcoin and it went down 75% and they couldn't buy what they needed to buy. So retail people like me, we buy Bitcoin. Sovereign nations buy gold. I own both. Distinct reasons, but they'll sort of blend together at some point. Why you should own both?
Well, it's interesting because I don't know if you know the story, but about 2-3 years ago, Nicolas Maduro, he held a shitload of Venezuelan gold in the London vaults. That's important. If you're going to be a sovereign and you're going to buy gold to hedge yourself against getting your assets expropriated, make sure you hold the asset yourself, gold.
Yeah.
Whereas, so the London vaults, London seized his gold, or the UK seized his gold. So make sure that, and this is probably an advantage of Bitcoin that governments don't appreciate or sovereigns don't appreciate, is you can easily send it and hold it yourself, self-custody at $2 billion worth of gold. And, you've got to make sure you've got access to that. But it's really interesting the way you break it down in terms of the different forces driving gold, especially the fact that it's not a debasement trade. And it's also like, I believe, in terms of oil trade now, Saudi Arabia and China have actually engaged in Yuan-settled oil trades, which is also, monumental in terms of global geopolitics.